Okay, good morning, colleagues, and welcome to our Audit Committee meeting on May the 14th, 2024. I will now call on Rianne Kassar, Committee Clerk, to conduct the roll call. Rianne.
Regional Chair Redmond. Councillor Erb. Councillor Harris.
Here.
Councillor James. And regrets from Councillor Deutschman.
All right, ready to go. I would like to acknowledge that the land on which we gathered today is the traditional territory of the Haudenosaunee, Anishinaabe, and Chinantan peoples. We acknowledge the enduring presence of the Indigenous people with whom we share this land today, their achievements and their contributions to our community. Are there any declarations of pecuniary interest? Seeing none, there are no presentations, and so we'll head over to the reports. 5.1, financial statements for the fiscal year ending December 31st, 23. Call on Mr. Craig Dyer, Commissioner of Corporate Services and CFO, to speak to the report. Mr. Dyer.
Testing. So thank you to the chair and welcome to today's audit committee meeting. A couple of items for the committee to consider today, and my suggestion is going to be that we take items 5.1 and 5.2 together because there's sort of a two-part speaking list. First of all, I'll turn it over to Tricia Alpa, our Director of Treasury Services, and Tricia is going to walk the committee through the staff report that's on the agenda starting on page 2. And then before the motion in item 5.1 is considered, it would be appropriate to hear from our external auditor. Mr. Beddick is here from KPMG, and will present his audit findings report, which starts on page 60 of the agenda. And once those two items have been spoken to and questions have been asked, then committee should consider the motion in item 5.1. So with that, I'll turn it over to Tricia. Thank you.
Good morning to the chair and members of Audit Committee. We're very pleased to be presenting the 2023 audited consolidated financial statements of the region, as well as audited financial statements of the Sinking Fund and the Sunnyside Trust Fund as appended in the report. The Municipal Act requires the annual preparation of financial statements in accordance with generally accepted accounting principles for local governments as required by the Public Sector Accounting Board. These financial statements were audited by the region's external auditor, KPMG, and each have a clean audit opinion. KPMG representatives will speak in more detail to that in their presentation. The financial statements have been prepared in accordance with the Public Sector Accounting Board standards, and there are 4 new standards required for the 2023 fiscal year end related to asset retirement obligations, financial instruments, and foreign currency translations. Subject to Audit Committee and Council approval, signed versions of the financial statements will be produced following Regional Council approval on May 22nd. Highlights of the region's 2023 consolidated financial statements include continued stable liquidity, cash balances at the end of the year consistent with 2022 as staff continue investing activities to take advantage of the high interest rates. Increased deferred revenue as development charge collections were very strong due to increased building permit issuances. Decreasing net long-term liabilities as the region's own purpose debt is now at $680 million. This is due to an intentional delay of some debt issuance due to higher interest rates in the fall of 2023 and slower progress than expected on some capital works. The region continues to carefully plan which projects are debt financed. Continued overall low debt servicing costs with a slight increase in 2023 are due to the increased interest rates on new debt issued, while maturities of debt issued during periods of lower interest rates. Future liabilities include the new asset retirement obligations, employee future benefit liabilities, sick leave and liabilities and WSIB. The funding of these liabilities will be from future property taxes and general municipal revenues. These include the new requirement to record asset retirement obligations. The region has recorded a liability for costs of landfill post-closure care, removal of asbestos from buildings, and the decommissioning of water and wastewater plants and networks. A liability for the landfill post-closure care had previously been reported under an older standard, which has now been replaced and updated with the new asset retirement obligation standard. These future expenses were calculated using models developed for each type of tangible capital asset through consultation with staff and a consultant specialized in asset retirement obligations. Overall, reserve and reserve fund balances have decreased slightly, mainly due to the timing and completion of capital works. The region's consolidated surplus for 2023 as presented in these financial statements is $123 million, which differs considerably from the year-end operating budget position of $5.7 million reported on April 24th due to the Public Sector Accounting Board presentation requirements, including the recognition of grant revenue immediately, the elimination of transfers to reserve and reserve funds, and the consolidation of the sinking fund. The sinking fund report an actuarial surplus of $3.6 million. The purpose of this fund is to retire sinking fund debentures issued by the region. And a sinking fund debenture has the entire principal amount repayable at maturity. Contributions are made to the sinking fund over the life of the debenture, which along with related investment income are used to pay the principal at maturity. The trust fund financial statements are required under the provisions of the Long-Term Care Homes Act 2007 to maintain and manage trust funds on behalf of the residents of Sunnyside Home. Resident receipts were significantly higher in 2023 due to fewer vacant beds than the year before and an increase in the discretionary deposit amount per resident used to access personal care services and activities. Region staff or president would be pleased to answer any questions from the committee members, and I will hand the floor back to the chair.
Thank you. I do not see any questions at the moment, colleagues. Oh, Chair Redmond, sorry.
Thank you. I apologize, Chair Harris. My e-scribe seems unresponsive. I just want to say thank you very much to Tricia. I understood all of that, or at least I think I do, so great explanation. I think at budget time, you know, it's sort of the wants and the needs and they're competing, and I guess I'm just looking for verification. All of what you told me makes me take away the impression that a lot of what we do is prescribed excuse me, by other levels of government or legislation, and that we need to adhere to that, and that this audit process is one that we've been doing since the beginning of the region, if you just can confirm that.
Through the chair, yes, that's correct.
Okay. I guess we'll go to, I'm sorry, we'll get to Matthew now. Thank you, Matthew, for joining us this morning.
Thank you. I think our presentation is just coming up on screen. So while that's coming up, I want to take an opportunity to thank Tricia and the rest of her team in assisting us with the conduct of the audit. Clearly, a financial statement audit is a combination of really three parties. It's the auditor, it's management, and it's the committee here. And each party has to work together in order for that to take shape. Certainly the time that we spent conducting the audit is significant, but it sort of pales in comparison to the activities that regional staff undertake in order to get us to this stage. So as we walk through, I'm here today. Courtney Cheel, unfortunately, she's ill and could not attend. I'll take our report as read. It's moving on the screen, but not. Next slide. Oh, okay. Great. One more slide, please. One more. So here we are in terms of status of the audit. As was mentioned in the staff presentation, our audit is basically complete. We're not in a position yet to issue our final opinions because we require the statements be approved by council, which we understand will happen next week. In terms of the status report here, we do identify that we're still awaiting receipt of a handful of letters from the region's external counsel. This is normal course. We require those letters to be received as close to the report date as possible. And so those are coming in now, and we do expect to have them back before our approval date of next week. Next slide, please. So in our audit planning meeting, we did talk about how every financial statement audit requires the auditor consider that there might be fraud in the audit. And what we mean by that is there might be an intentional manipulation of the accounts by the preparers. So that sounds very ominous and dark. It's really not meant to be that way, but it is something that we do have to think about and we do have to respond to. So we've got a handful of specific responses to this risk. Most notably, what we do look for are high risk or unusual activities or entries through the accounts of the region. And in doing that, we use some software tools to assist us. We literally take the entire transaction set for the whole year for the region, so literally the hundreds of thousands of transactions, put those transactions through a filter and look for things that don't make sense. Where we identify those, and we did identify a handful of them, we do a deep dive on those transactions to make sure that there's no indication of fraud or wrongdoing or intentional manipulation. And based on our procedures, we have no findings whatsoever on this. Next slide. One of the significant liabilities on the region's financial statements are its post-employment benefits. And these include both the health and dental benefits that are provided to early retirees. I believe there's also some health and dental benefits for certain service employees, as well as WSIB payments in the future. These determination of these liabilities can be complex. They require the use of a third-party actuary to perform those calculations. We have worked with that actuary. We've relied on the actuary for the underlying calculations, an area where they are specialists, but we have made sure that the assumptions that were used, including inflation rates, healthcare cost trend rates, discount rates, are reasonable and in accordance with the standards. And we've also ensured that the population of information that they used was appropriate. So for example, if they're calculating these liabilities based on the demographics of the region's employees, we've checked to make sure that the data that they've got matches the actual data set. Based on the work that we've performed, we didn't have any findings or adjustments. On the next slide, we do talk about the accounting for obligatory reserve funds and deferred revenue. And more specifically, when we talk obligatory reserve funds, this is mostly development charges. And so I want to remind committee that development charges are recorded as revenue in the audited financial statements, not when the DCs are received, but when that money is actually spent. And so there's a difference between how we show this as revenue and the cash collections that come in. We also note that certain DCs are not collected right away. They're under the deferred program where they're received over time depending on the nature of the development. And we also know that there are waived DCs, so certain DCs that the region is ultimately entitled to collect but has decided not to for certain purposes. And there's separate accountings for those. So what we do is we check to make sure that the amounts coming in make sense. We confirm those amounts with the lower tier municipalities as they are the primary collection agent for the DCs for the region. We look to see that when amounts are transferred out of the reserve funds, they're transferred in accordance with the DC bylaws and studies that were done, and they're for growth-related projects. And then lastly, where there are waived DCs, we make sure those are accounted for properly and not showing up as revenue a second time. Again, no findings here, meaning no adjustments. On the next slide, we do summarize again the asset retirement obligations that was referred to earlier by staff. Again, a very significant new liability on the financial statements, and one that does require a series of complex estimates and judgments. So we looked at the overall accounting position that was undertaken by the region. We tested a sample of the obligations that were recorded. We looked into the underlying assumptions to make sure that those are reasonable. And then we looked at the overall presentation and how that was recorded in the current year. Again, no issues or findings. The item here for tangible capital assets on the next slide, the TCA, or the capital assets, is the largest single item on the region's financial statements. If you could advance one slide, please. And this represents all the buildings, water and wastewater infrastructure, roads, the LRT infrastructure, vehicles, computers, furniture, and fixtures, all the physical items that you use to deliver the services on a daily basis. We look at how those are added to the accounts each year, doing a sample of testing of items. We look at how those are depreciated over time and the expenses that are recorded. And we also look to see that there's no impairments. Again, based on the work, no issues or findings. The next two slides are really a lot of white space, but they are required communications. We are required to identify and report to committee if we identify any corrections to the financial statements or if there are any items that remain uncorrected based on our work. We're happy to say both of these are zero, which means that the accounts that we were given to audit didn't need to be adjusted based on our audit work to come to your financial statements. So when we take that in connection with, I think, the next slide, where we're required to identify if there are any significant deficiencies in internal control for which we have not identified any, we look at those two things together and the clean audit opinion, that's where we sort of give a green check mark or a bright yellow star to the preparation of the financial statements, to use sort of really plain language. Where we would see multiple control deficiencies or where we would see multiple corrected or uncorrected items, that would start to be an indicator of, perhaps a less precise method of pulling the financial statements together. And while staff rightly recognize that there are significant adjustments between the the surplus as reported in the audited financial statements and that which was reported back in April on the sort of the operating budget basis, it does give committee and council comfort that the underlying data that's used to make those reports is sound. On the next two slides, we do go through accounting policies and practices. I'll summarize them both quickly to say everything is in order. It's as we would expect. The statements have all the required disclosures and are appropriate for the size and scope of the organization. They look very consistent to what other regional governments would report in their financial statements from a size and form perspective. With that, I'll pause and turn it back over to the chair for questions.
Questions, colleagues? Chair Redmond.
Thank you, Chair Harris. Thank you, Matthew. You've convinced me, as much as I understood what Tricia was saying, that this is very complicated. I actually have two questions. One is, there's lots of municipalities that have police budgets that are part of their process, and I'm assuming that the region of Waterloo is no different, and I'm wondering if you just comment on that. It was one of the hiccups along the road when we ensured that Mr. Dyer had a really interesting big finish to his career here, and it was something we had never experienced before. Can you just speak to how the police budget is dealt with in the body of the audit for the region?
Right, so we wouldn't look specifically at the budget itself. But the accounts of the police, the WRPS, are included in these consolidated financial statements, and they would be subject to testing just like any other department would be.
And you may or may not be able to answer this one, and if not, maybe we'll ask Mr. Dyer later, but our AAA rating through Moody's has really benefited not only the region, but WRPS, as well as all area municipalities, because we take on debt. Can you just talk about, is it really common to have a AAA rating, and what parameters they measure us against to make sure that we have that? And again, it may be a Mr. Dyer question.
So I can answer part of it. It is common amongst Ontario municipalities to have a AAA rating. I'm not trying to steal your thunder at all. And sorry, the second part of the question, the factors that they look, yeah, perhaps staff would be better equipped to respond to that question.
So through the chair, I would say that, yes, there are a number of municipalities in Ontario and indeed in Canada that do have a AAA rating. I think there are a number of reasons for that. Some of that has to do with the framework in which we operate in terms of we have to have a balanced budget. We can only debt finance for capital expenditures, not for operating costs. And I think we've, over the years, the region has developed very strong internal financial practices in terms of its financial reporting, in terms of its management of debt, in terms of its conservative approach to investing. And all these factors are taken into account by Moody's when they do their annual review. And I would say that within Moody's, they have a fairly detailed data model that they update regularly, largely using data from the financial statements and the financial information return. And they use that to, I would say, to compare the financial status across municipalities. So as they're gauging whether a municipality fits into AAA or AA or single A, whatever it may be, there are tolerance ranges that they have for certain measures. The amount, their debt burden, for example, is a significant one. How much debt do we have relative to our ability to generate revenue? What does our overall liquidity look like? What does the debt to equity, debt to reserve ratio look like? And within those tolerances, their model then determines ultimately what the rating is. Hope that's helpful.
Thank you very much.
Councillor James.
Thank you. I noticed that you said that there were no uncorrected statements and no corrected or misstatements. So I just want to recognize the staff for, that level of detail for having no misstatements. I think that speaks to the level of detail and work that goes into preparing this. So something to celebrate there. Thanks.
Absolutely. It shows the professionalism of our staff. So thank you for that was for our presentation. I don't see any other questions, so I'm going to go back to 5.1 and we will vote on the financial statements for the fiscal year ending December 31st that the Regional Municipality of Waterloo approve the attached consolidated financial statements, sinking fund financial statements, and trust fund financial statements for all the fiscal year ending December 31st, 2023, as set in the report dated May 14th, 2024. Colleagues, get you to head over to eScribe. We'll get that vote done, and we'll move. Oh, sorry, I'll need a mover and a seconder first. This is still a meeting that we have. So moved by Councillor James, seconded by Chair Redmond. All those in favor, head over to eScribe. That was a quick 3-0 vote. That's great. Thank you, colleagues. So for 5-3, we'll go over to Tricia Alpa, Director, Treasury Services, Deputy Treasurer, to speak to the report request for proposal for external audit services 2024 through 2028. Tricia.
Thank you. Through the chair, this is an information report to advise the members of Audit Committee on the process and timeline to issue a request for proposal for external audit services for the 2024 to 2028 fiscal years. The Municipal Act requires municipalities to appoint an external auditor. KPMG was appointed as regional external auditor in 2016 and was extended in 2021, 2022, and 2023. The KPMG appointment as auditor to the region expires with the completion of the 2023 fiscal year-end financial statements and other program-specific audit reports. Staff intend to issue a request for proposal for external audit services this spring, with a timeline of awarding the contract in August, such that planning for the 2024 year-end audit may commence in the fall. Thanks, and I'll hand the floor back to the chair.
Okay, thank you. Any questions on that? Seeing none. I don't have any information or correspondence. Is there any other business, colleagues? Mr. Dyer? Yes, absolutely. I was going to go to you regardless. So, Mr. Craig Dyer.
Thank you to the chair. And I'd just like to take this opportunity before Audit Committee to express my thanks to Tricia, to Lori, to Cheryl, and the team for all of the hard work that happens, not just during the year-end process, but on a daily basis. The management of the transactions of a $1.5 billion corporation with hundreds of different lines of business is not for the faint of heart. And the better we can do that over the course of the year, the easier the audit will typically be at the end of the year. And so I'm, particularly grateful for the significant amount of work that's been done and for the quality of that work that has led to such a favorable audit findings report and another clean set of opinions on our statements. So thank you very much to the staff. Well done.
And thank you, Craig, for, of course, your leadership throughout. So we appreciate that. We will now start a vote to adjourn the meeting if there's nothing else. So, Chair Redmond.
I just would like to formally thank Craig and his team, but also KPMG and Matthew, who has helped us navigate through this. To have a objective third party who is as professional as KPMG is, I think, a wonderful stamp of approval. And I'm sorry, I just have to say this, that 12 and 13, where there were no comments, if you're writing poetry, that's called white space, and that's a good thing. So great that we had white space, as Councillor James pointed out.
So for adjournment, I'll get one of the two of you to move and second it, if you don't mind. Moved by Councillor James, seconded by Chair Redmond, and eScribe it is. Okay, and that is carried. The meeting is adjourned. Thank you, everyone.